Hey everyone, John Ernie here, and today in the market psychology video, we're going to be taking a look at a range day here on crude oil. Good old range days, one of my favorite market environments because they can be so easy to trade in the sense that they're very forgiving. You can take one of the worst entry points in the day, and a lot of times they will still come back for you so you can minimize your risk. Absolutely love range days. Now, in terms of a range, we initially started out with a range from yesterday. That's what we ended the day with on the prior day, and we opened up, gap down, we opened it towards the bottom of that prior day's range, and it immediately pushes back in. Now, you'd initially be thinking, all right, well, we have a big level of support, we have a nice bull candle, lots of wick at the highs and the lows, but, coming off the range lows, we should be going back up to the highs, but the buyers never continue. Then we see the sellers try coming in, but they're even weaker, staying inside of that first 5-minute candle right there. And then we see the sellers try again, and they're weaker still, right? They can't even break the second 5-minute candle. And then the third one stays inside. So we're just getting tighter and tighter and tighter. And a lot of times when that happens in a range, you're expecting a fake break and maybe even a few fake outs before you start getting a move going. And that's exactly what happened. The buyers tried breaking out to the highs. They failed, so they try selling into it thinking they're going to get a breakout to the downside. But they don't realize they're selling into a large area of support, and that's not where you want to be selling. And that was only for them to get in and get stopped out. So it's kind of like a trap. It traps in buyers, they're wrong. Traps in sellers, they're wrong. And then they finally get the move going, where if you were a buyer off that level, then you were able to pick up a decent move up. Now, in this case, because of the obvious range sentiment, we can't even break out of the first 5-minute bar. All the candles have a ton of wick on it. There's no consecutive movement. There's no consistency. We're in a range. We need to be looking to buy low. We need to be looking to sell high. And we need to try to stay out of the middle as much as possible. We go up to the prior high of day, huge wick on the top, very obvious that sellers are rejecting it, and we are very high in the sense that we are in a range and we are breaking out above, and it's not likely to hold. So you sell into it knowing that the buyers don't really have a good argument, and any buyers that were in it were probably already taking their profit right here anyway. So no buyers are left to hold the market up, and it's naturally going to have to pull back. Beautiful fade right back down to the range lows where, you guessed it, buyers come in underneath the lows, goes 1 or 2 ticks underneath the low, and then snaps higher, form a little pennant formation. This is actually the trade of the day video, with a big run higher right off of that move. Push back up to the prior high of day. Well, guess what? We're at the highs, and we're at the area where we last saw the buyers fail. You're likely going to see a pullback again, and they pull right back down. Now, in this time, they weren't able to actually finish the job, and you'll actually see right now crude oil is breaking aggressively higher. What were some clues? Well, some clues were the sellers tried getting the move down to those lows again, but they were getting a lot of failure, lots and lots of failure underneath here. When the buyers showed up, they weren't that strong, but when the bears showed up with heavy sentiment, they couldn't even trigger in more sellers underneath before the buyers took it right back again. So at the very least, we're looking at this thinking, okay, well, the sellers aren't getting the job done, so buyers are likely going to try to come in to just finish the move back to the highs, and then we'll see what they want to do from there. So that does give you an option to buy there as sort of a little kind of pullback buy right there, especially after failing off of that monthly support. But when they come back to the highs, look at this bar right here, right? This bar is no joke. It hammers outside of that initial morning range. And that's not the type of candle that you necessarily want to fade into. You want to be selling this kind of candle where we see a lot of wick, something that proves that the buyers may be a little bit shaky. This doesn't have that. Closes very near its highs. And if you waited, the follow-up couldn't even trigger a bear candle. It closes as a bear doji. So buyers are heavily scented into this move, trying to get this continuation to go higher. And look at the follow-through. After the buyers saw this candle, I don't think anybody was really looking to sell anymore. We had the breakout. We didn't have any sellers trying to prove that it was going to be a top of a range. Buyers broke out again. Sellers may have tried, but they ultimately failed, and more likely buyers were above that trying to get this as a continued breakout move to the upside. And look at the follow-through. Just a gorgeous run higher after we shifted sentiment. And this is one of the hardest things to do when you're watching markets, is figuring out when the market shifts its sentiment. And it really comes down to paying attention to these small little nuances. The sellers weren't able to prove anything. They weren't able to rotate down. When we came back to the highs, the buyers proved it. They nullified the sellers, and they proved it again. So we're seeing the buyers breaking out of the mold, and that allows a big run higher, which it looks like everyone jumped on. So hopefully you learned something. Hopefully you found it interesting, and we'll see you next time.